Let's move on. Grindrod Bank listed 2 smart beta exchange traded funds on the JSE today, and Gareth Stobie, head of capital markets at Grindrod Bank, joins us for more. Now, you're going to have to take us a step back. Smart beta. I know Narina's with you. I'm not with you. So what are we talking about?
I have my left-hand sort of lieutenant on the subject right next to me from Nedbank. Smart beta, very simply, Bronwyn, if beta is the definition of the market, and when you invest in an index, you're investing in a simplified market format, a market capitalization index. Smart beta is a way of adding smart rules over a simple index and adding things like dividend yield, things like volatility, earnings, etc. over a traditional index. So it's kind of where passive investment management meets active investment management. We're simply not just taking market capitalization and leaving it at that point. You are adding some extra dynamics to how you put a portfolio together.
So these are clever instruments, Lindsay Williams.
Gareth, yeah. I'm sort of looking at this. I'm slightly cynical tonight because of that conversation we had about the Nigerian situation, so forgive me if I'm a little bit bitter. But this is like a Verimark ad, and there's an ETF, and you get the ETF, and if you subscribe now, you get this, and this on the JSE or whatever exchange we're talking about. There are so many add-ons, so many products. And can you tell me that the products that have just been launched are really necessary in the investment world?
They are necessary because what they deliver at the end of the day is actually quite simple. Take, for instance, Dividend Aristocrats. Dividend Aristocrats is a ETF that tracks companies on our bourse that have delivered a sustainable dividend yield over extended periods of time, 5 years in this instance. So companies that have paid regular dividends and have increased their dividends over periods of time. And we are delivering that product at a very low cost, only a 40 basis point fee. And so for clients looking for dividend yield, for growing dividend yield as an inflation hedge, it's a wonderful instrument. Likewise with the low volatility ETF, which is the other product that we've brought to market, also first to market I might add, it addresses possibly one of the biggest concerns in our market at the moment, that perhaps we've run ahead of ourselves from a valuation perspective, and it looks at stocks that have delivered consistent low volatility, i.e. low risk in terms of their total return profiles, and puts together a low risk equity portfolio. So both have very deliberate end goals in mind. One can define who the investor is quite easily, and they are cheap, transparent products. So to answer your question, yes, there is space for them. They are first to market, and we're very excited with them.
Gareth, I would definitely agree with you that these are necessary. I do question the South African market's readiness for products such as these, especially when you look at your target market. I'm comfortable that within the retail space, as long as this is well explained, that it's not just a Verimark ad, but that it really is a proper value add product and coming at that very low cost. My question is, what do you think the traction will be within the institutional space, where many of your institutional managers will probably say, you know what, I can do this better than you can do it, so why should I, institutional manager, buy your ETF for my portfolio? How do you find the response from institutional investors have been?
Well, so far the institutional uptake in the ETF market, as you know, has been quite sort of poor. But I think that one can define the ETF market in multiple different ways. I think it's a broad audience. If you look at the Dividend Aristocrats ETF, by the way, that trades in New York, that is run by State Street Bank, it's got $47 billion under management. Why? Well, because it appeals to multiple types of investors who are getting a good dividend yielding product from, in a low cost, transferable format, etc. So yes, okay, our institutional market here isn't immediately buying into this, and Lindsay challenged me the last time actually I was on the show on that front. But I think that the only way for those perceptions to change is for us to launch products like that, and then beat the streets in terms of drumming up investor demand.
Narina, I'm defaulting to you. You are the expert. I'm not going to come up with better questions than you are at this point. So you've got the final question to Gareth as well.
I think the other thing that we're seeing is that the JSE has now also announced that they will be launching some smart indices. So not ETFs just yet, but coming up in May they will be launching risk-targeted indices as well as also low volatility indices. So I think what's quite interesting is that we now have this position in our market where we've got a large international reputable index provider being S&P Dow Jones, I wouldn't say necessarily challenging the JSE, but really providing an alternative. Do you think we can expect to see ETFs tracking some of those JSE smart indices anytime soon, or do you think that probably have enough smart ETFs for the time being in the local market?
Put it this way, from our perspective, we aren't engaging with the JSE in terms of those smart strategies. We're very excited about the move of S&P Dow Jones to enter our market. They are, after all, the world's biggest index provider. I think they've got something like 40% market share of world indices. You're quoting the Dow Jones Industrial Index, the S&P 500 Index earlier. This is an index firm that has got a pedigree like none other, quite honestly. So for them to be in our market offering index solutions, we're very excited about that. That's why we are moving some of our product range to track their indexes. And I think it is a little bit of a challenge. I think it's a nice shake-up for our local market to have different types of indices. Different investors can use different benchmarks depending on what they're trying to achieve. And we'll see how the market evolves from here.